Hello and welcome to the fourth and final installment of my lecture on the bank reconciliation. And we are now at the end of the process, and we're going to talk about the last two steps, which is reconciling to actually make sure that we have accounted for all the differences that we were supposed to account for, and then adjusting for any items that need to be corrected or recorded. So in our last few lecture series, we've gone through all of these steps. We identified the total differences between our bank and our book. We then did a detailed look at what those differences were. We put those differences where they belong on the bank reconciliation. And now it is time for us to determine if we've actually accounted for everything and accounted for it properly. And that step is called reconciliation. Okay? And reconciling is kind of a nice little way that you can check your work and make sure you did it right. And this, again, is why I love accounting so much, is there's a lot of opportunities where you can check your work to make sure you did it right. But the goal, again, in a bank reconciliation is to make sure that both parties, the bank and the book, agree. They're shaking hands, they're buddies. And that's what we mean by reconciling. Just like we say when we're reconciling with somebody after a fight. We're seeing eye to eye, we're making sure we agree on something that we previously disagreed on. So if we look at the example we've been working on, we are now going to focus here on the bank reconciliation. And specifically, what we're going to look at is the step on the very bottom of the reconciliation called adjusted bank balance and adjusted book balance. So what that means when we say adjusted is it means that we're adjusting for all of these items that we're adding or deducting due to differences. Okay, so what we're going to do is we're going to start with our beginning balance, or I shouldn't say beginning balance, our ending balance that we started the reconciliation with. We're going to add in any items that we need to. In this case, it's the deposit in transit. And then we're going to subtract out any items that we said we were going to deduct, and that's the outstanding checks. And when we do that, we arrive at $24,278 and 40 cents. That's right here. Okay. Then we're going to do the same thing on the other side. We're going to start with our book balance. Then we are going to add in any additions, which is the note that the bank collected on our behalf. Then we're going to subtract out anything that we said we were going to deduct. So that's our NSF check, our service charge the bank took out of our account, the collection fee that the bank took out of our account, and the error that we made because we recorded that check for the wrong amount. And that also comes out to $24,278.40, which we see right there. Does that number sound familiar? It sure does, because that is also our adjusted bank balance. So these two amounts should match. That's how you know that you did it right, that you've reconciled the two accounts. Now, this isn't necessarily 100% foolproof. There are some situations if certain numbers are very similar, where you could end up having those two numbers agree but not necessarily having your bank reconciliation done correctly. But this is a pretty good check figure, and I'll tell you something, if they do not agree, then you know for sure that you did something wrong and you need to go back and check your work. So I don't want to see a bank reconciliation from anybody where the two balances don't agree, because you should know that that means you need to go back and double check your work. Okay, so now that we have reconciled everything, we're not quite done yet, because part of the reconciliation was helping to identify items that weren't yet recorded or that were recorded in error. So part of the bank reconciliation is once you identify these items, you actually have to fix or adjust them. Okay, we can't say like, oh, well, there's these differences and just let it go. We need to actually address those differences. Now, not all differences need to be adjusted, okay? It's important to understand when it's necessary to make an adjusting entry. Now, certain items in our bank reconciliation are what we call temporary differences. And a temporary difference is one that is going to eventually resolve itself when the other party finds out about it. These examples are primarily the bank differences, so the deposits in transit and the outstanding checks. Okay, these are temporary differences because the bank won't know about it until the bank, receives the check from whoever you wrote the check to cash it. So there's really no adjustment there. They'll record it when they get it. But when you do need to make an adjustment, that is when the difference is permanent, meaning that unless you adjust your books or record something, they're never going to equal out. So these examples are really the differences on the book side. So the things that the bank either put into your account or took out of your account that you didn't know about, so you haven't recorded yet. So that's going to be things like the service fee or the NSF check. Okay, those are things that the bank knew about that we haven't recorded. Well, we need to record those because it's not just something that will resolve itself. Another thing that we need to adjust for is if we need to correct an error. So if we recorded something too high or too low, we need to fix that. It's not going to resolve on its own. Now, I didn't ask you a whole lot of questions on adjusting entries. I think there's just one homework question that's going to ask you to understand, to be able to recognize when an adjustment is necessary and when it's not. So hopefully the rules that I've given you here and the examples are a good rule of thumb to help you with that. And the book can help you with that as well. If you have any specific questions, of course, please let me know. But that concludes what I wanted to talk to you guys about on the bank reconciliation. So at this point, we have gone through all of the steps from figuring out that there is a difference, identifying the additional differences, putting them all in our bank reconciliation where they belong, reconciling the accounts to make sure we've accounted for everything, and then ultimately adjusting for any items that need to be adjusted so that we do ensure that our accounting records are correct and complete. Because as you will recall, that is one of the primary steps or purposes of the bank reconciliation, is to make sure that our cash records are complete and correct. So if anything's missing, we want to make sure that we account for it. If anything is incorrect, we want to make sure that we correct that as well. So thank you so much for watching my lecture. I have one more little funny video clip that I'm going to add as a separate item in this lecture series. It's just for fun, but it will hopefully reflect for you a funny example of why it's important for all of us to be looking at our bank statements and what the bank's doing to make sure that they're doing it right too, because you can definitely catch some errors that way. All right, thanks a lot, and I will see you in class.